What's up, everybody? Welcome aboard to Trading Live with Bubba for Tuesday, August the 13th. And, well, I don't know. There's not much to say. Markets are deader than dead. You can see declining volume all over the place. The rally based on the PPI number this morning, I guess. I don't know. It's a joke when we're watching what we're watching. But, again, it doesn't matter. You can't fight the overall market. You can't fight the tape. But right now, we have nothing really to look at. I mean, there's a potential trade in the 10-year here, which we could look at. But typically, many don't trade the 10-year. And it's a bigger tick size, a little bit more risk. But certainly I trade it. And certainly if we get a trade there. But right now it doesn't look like it's coming. So we'll go back to our normal weekly start and see what's going on. Of course, Apple is the one we look at all the time. And again, it did come off that very oversold condition right back to the mean right now. At this point, there's really nothing to do. I would look at 225 resistance, but again, I'm not thinking about anything right here. The lack of activity in the market, the lack of volume is a concern to me for trading. I don't think it's very active. So I would sit it out. Again, I'm going to give you a lot of sit it out today because there isn't much going on here. Amazon. We've got a gap to fill up to 178 or 180. We're at 170 resistance here now, but still in that oversold condition. So I don't really want to get overly involved. I mean, it doesn't look very good, and certainly it could fail from here. But I think there's probably a greater chance of a little bit of a rally before a failure. So you're seeing that what we don't have some of the easy calls. And again, just because the call is easy doesn't guarantee that it's going to be a winning trade. But these are very challenging just in general. Coin, again, came off that oversold condition, but it looks like 200 is pretty solid resistance for the moment. Again, I don't have a trade to give you here that I would be putting on myself. Crowd, again, very similar, but is making it back to the mean. I would think if you got it back up to 250 or 260, you might want to look at doing something here. But again, a lot of these things you're going to find because of the lack of activity, because of the lack of action, there really isn't much going on. Let's just go back and see if we have anything to do in our 10-year. And yes, we can take the 10-year, all right, which I did sell. And the stop on the 10-year is going to be 113.23. 113.23. And so we are in that now, or I am in that anyways. And right now, again, there is nothing else going on here. So let's go back to the basics. Okay. And Meta, again, we got down to that oversold condition as we talked about, rallied right back up. Now it is overbought. Meta, I would look at up in here as a potential selling opportunity. Again, I would look to sell call spreads here. And what you want to look at is how involved do you want to be? Do you want to take a short position or do you just want to try to collect the premium position? And that would be, if you want to take a short position and sell a deep in the money call spread, okay, it would be something like I would do it for this Friday, but let's say you sold the 510, 525, so 510, 525. You get about a $10 credit. Okay, you've got a $15 risk, so you get about a $4.85 risk. But what you're really mimicking, or what you're really buying, if you make this trade, is you're buying the 525 put for $4.85 instead of $7.30. Okay, so that would be one way to play it. That would be with a more of a bearish tint. If you just decide to sell the 5, let's say let's sell the 525, 530, which is just a premium sale. Okay, you'd be getting about $2.30 with $2.70 worth of risk. So that would be, those are your choices. Again, you're selling something that is worth nothing right now, but you do, obviously we're into a rally. So that'd be something that you might want to look at. Again, those are things that I would be potentially looking at. But I am personally, other than the day trading, if they show up, I'm remaining very light because there isn't enough action right now for me to want to get involved. Our Google trade worked perfectly last week and cashed out as we put it on Thursday. And of course, it did come right back, and that was a good trade. Right now, again, we're in the middle of nowhere. There's not much to do here. IWM is in the middle of nowhere. So everything is just hovering. Okay. And if it was busy and there was some volume, I might be looking at some of these charts a little bit differently. But the lack of overall action, the lack of activity says to me that there's not a lot to do. This would be a golf day right now. If I was back on the trading floor, I'd already be on my way to the golf course. Okay. So again, there's times to trade actively and times not to. And, Square continues to hover down here along the bottom. Moderna. It doesn't look like it wants to do much here. Now, again, certainly it does look like it is finding a bottom. And certainly if you wanted to sell some put spreads here, I could live with that. But again, I go back to the lack of activity because you see many bigger swings when the markets are quiet, and you don't want to get stopped out by accident. You need to have some market participation if you're going to be active in a market. And there's very little market participation right now. Microsoft coming off that bottom, which we talked about, getting ready to reach back towards the mean. Again, overall, the trend is really lower. I'm really not interested in getting too involved here. I don't like I don't like to make guesses when I don't have the probabilities in my favor. Okay. And that's something that I think you have to learn and recognize, is that you need probability in your favor. Nugget came from the bottoms, of course. And again, a little bit higher, I'd probably look at trying to sell some, but right now I don't see much. NVIDIA might be something. Again, you can see that we've seen that oversold area relieved. So now it's a question of, what do I have here? Well, again, I would lean to shorting, but right now I don't have anything to do here. So again, I don't have any reason to trade. Again, the lack of participation in the market, the lack of market action is keeping me more on the sidelines than anywhere else, because I don't see a reason to get overly involved. The Qs, very similar. So you've seen a lot of things have reverted back to the mean. And when we look at that, we go, okay, back to the mean. Okay, that's fine. So again, where's it going to go from here? And basically, based on the overall trend, they should start to fail. But again, I look at this and I go, geez, there's no action. There's no market players. There's no volume. So do I really want to get involved in a market that has a lack of volume? Let's just slip back and see if anything has developed. Our 10-year is a small losing trade at the moment, but we still have room. Again, the NASDAQ, look, if we were really busy, I would look at this trade at selling the NASDAQ, but we are not busy. Okay. And so I'm making an exception. If I make that trade, I'm making an exception into a market that's not doing much. And I don't think that is very wise from a trader standpoint. There's a lot of money to be made trading, but you have to be patient enough to wait for when the opportunities arise. And again, if I was really busy and we had 4, 5, 6 open trades, I would look a lot closer at some of these things that are close. But because we have nothing on, I'm not really interested in trying to get too involved here, because there's really no reason. Why should I put myself in jeopardy when the lack of activity in the market is telling me that I'm really a coin flip? Even if it looks like I might have a slight edge, I'm really no more than the coin flip right now with this action. Square bounced off the bottoms, which we thought it would. And again, this would be one that I'd certainly look to be selling. But again, the lack of I know this is redundant, but the lack of participation keeps me out, keeps me on the sidelines. Now, don't remember, I have positions in all of these anyways. I mean, I'm short most of the ones I showed you already on a longer term basis from our equity portfolio models. Okay. But that has nothing to do with what we're doing here and trying to be more active or more proactive to the actual trade. So again, I have positions on every day that are longer term in both the futures and the markets. Okay. And if you want to just get full disclosure, I'm flat Apple Right now, we were short. We flattened out this morning, which we're still would be short if it signals. I'm short Amazon, short coin, short crowd. Excuse me, not in crowd. My apologies. Short Google, short IWM, short Microsoft, short the Qs, short Square, short the SPY. Okay, because again, all I've done is reached back. Okay, those are my full disclosure on what my positions are. Short Tesla. Okay, Tesla's bouncing up again. Where am I? I haven't even reached back to the mean yet, which is certainly a possibility. Short Win. Okay, and we've been short this for quite a while. But again, there's really nothing for me to do here other than to sell put spreads, and it's been so dead and so dull. Then why do I want to get involved with these things? And XPI, we don't have a position in, but again, it's just in the middle of nowhere. And Zoom, again, hovering on the bottom. Earnings next week. Certainly, if you wanted to sell some put spreads here, I'd be okay with that. But really, I don't see anything that is worth trying to get involved in right now. And again, you have to remember that when you're trading, you need to find a high probability trade, okay? Because at the end of the day, without it, you're just flipping a coin. And I don't think that that's the wise way to trade. I think you need to be more concerned about being much higher on the probability scale to give you a much higher chance of winning on that trade. Because even when everything is perfect, if you're a poker player, even when you have pocket rockets, you don't always win. Certainly crude is a potential trade here. Again, I don't like the lighter volume, but I will take a look at it as I always do. And see here, now that it's the decision is going to be based on my stop has got to be at 77.90. Okay. I don't know that I want to take, that all that much risk. Okay. But we'll look at it. But again, the lack of speed, the lack of emotion to the market, the lack of panic from participants is saying to me, you're probably better off sitting out and waiting versus trying to get overly active in this market. Again, I love to trade. I love to be active. I mean, I've traded when I was on the trading floor. I've traded as many as 100,000 contracts in a day. But here today, so far, I've only traded futures because my option position is already open. And so far today, I've traded 66 futures. Okay, since 3 o'clock this morning, which is obviously virtually nothing. Okay, so again, I think you have to remember what you're trying to get done, and you want to make sure that you have probability in your favor. So as you watch these, you can see that they're barely moving. It's almost like a holiday kind of volume in a holiday trade, and those are never any good unless you get some panic or you get some chasing. But if you look at this market, do you see either of those two things happening? Do you see panic or do you see chasing? And my answer would be no. Okay. You might have seen a little bit of panic in crude, but again, I can't get too excited when there's no speed to this market. And I think that's what you have to be aware of, is the speed at which the market trades, which also ties back into the participants that are in the market. And right now, I think you have a overall lack of participation, which is why the markets continue to drift higher. And if you understand markets, there is an old saying, an old adage that dull markets drift higher. Okay, well, it doesn't get much duller than this. So it's hard to fade or go against what the markets do on a normal basis, which is if the markets are dull and quiet, they tend to drift, because no matter what you might think about this market, whether you have an opinion or not, which you shouldn't, but if you do, okay, the bottom line is markets do go higher over time. The average since the inception of the markets has been 8.5% year over year. And since 1950, the markets have averaged a 10% gain year over year. And again, every year they haven't gone up, but the average gain over those times has been 10%, which is why I'm very comfortable sitting on the sidelines here, not worried about what goes on, because of my entire portfolio, my entire retirement is all hedged using options and from our hedging program that I teach. Okay. And again, it allows me not to worry about the markets. And of course, last week on Monday, I accumulated a lot more stock because of the way the program is written. It is written to buy stock when your position drops 3% or more. So here again, as we look at this, it's very, very dull, very much of a lack of activity, and we just keep drifting higher. Every little sell-off is buyers show up, and of course the Nasdaq is now up 323 for the morning. The S&P is up 54. The Dow is up 177. Now, to me, if you were to ask me to look at into the future, at the end of the day, I think there's a better than even money chance that the Russell and the Dow close lower on the day, although they're higher right now. Nasdaq and S&P too hard to call. Okay, but we've already seen some weakness today where you saw the Dow drip all the way back down, as did you see with the Russell, but we have come off of those. So, but if there's going to be anything going to be lower, if I were going to look to sell something, those are the indexes I'd be looking at right now because they are much weaker than the other. And the one thing about trading, you want to remember, you want to be long the strong and sell the weak. Okay. So again, right now we have nothing going on. Our 10-year is a small profit. Okay. As you can see, you should have sold it at about 113.18 half. And it's right now, you can buy it back right now at 113.18. I'm not recommending that, but you can buy it back and make $16. Okay. Again, we're looking for more, but that's what we're watching right now. And again, if we can get down to about 113.16, I'd move my stop to break even and just leave it alone. Okay. I'd lock in the tick and a half profit, which is, $50. Okay. And then see what happens, see if it'll fall apart from here. I'm willing to take that risk again in this very, very slow market condition that we're watching. But you can see that we're not getting any action off of any news, off of any trade. There's very little action. Okay. When you see here's a price ladder. Okay. Here's one of my price ladders on the Dow. When you see this lack of speed to a price ladder, they're not going anywhere. Okay. And then suddenly there'll be a little spurt to the upside, and that it'll continue to go that way. Okay. But that's what I'm trading off on my other screen. Okay. Those are how I enter my trades. But again, you can see very much a lack of activity. There is a little bit of action. There's a little bit more action in crude, as you can see. Now, we would have had a buy signal, but we chose to pass because of the lack of activity. And it wouldn't matter. We would have been in right around here, but we chose not to make the trade because, again, at the end of the day, I don't have to be overly active. I'm here to make money. I'm not here to do anything else but to make money. Okay. And so for my money, I'd rather sit back and wait. Okay. And not get too active in this horrible conditions, because anytime you want to learn how to lose $5,000 in a $1,000 range, I can teach you. I've done it many times in the past. Okay. And that's one of the things that you learn as a trader. If you want to do this for a living or want to do it for real money, then you have to be willing to not trade, because the decision not to make a trade, the decision not to get involved is just like making a trade. It's saying that this market is too challenging and I cannot find a big enough edge anywhere. Okay. So why would I want to get myself overly involved? Okay. Now I am going to look at, I am going to go back and look at Meta. Okay. Because I do think I'm going to go ahead and put a trade on in there, but let's just see what it looks like. Okay. So now it has peaked and it continues to rally. So now let me just pull up the screen that I'm actually going to make the trade on, the one that I teach off of. Okay, hold on. All right, so Meta. META. Okay, Michael Echo Tango Alpha. All right, so Meta for the 16th, if I sell the if I sell the 530, sell the 530 by the 535, do it for $1.75. I don't necessarily like that. I'm going to actually look to take a short position here. So let's look at selling the 510, 525. Okay. And I'm going to do that trade, and I can do that trade for $10.50. So I'm going to take $4.50 risk. Okay. And it's like buying the 525 put, which is $6.70. So I'm buying the put by creating the spread cheaper. Okay. And I filled at 1050. Okay. So I've got a $4.50 risk, and I've got a potential gain of $10.50. Okay. And that's what I'm going to do for now. And we'll see you all back here. And there'll be a tape on Thursday, but I'll be back next Tuesday. And of course, I do the market 120 every morning. Have a great day, everybody. We'll see you later.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.